Well, I hope you've all enjoyed the fabulous presentation by Simon Reeve. Next up, we have our panel discussion around the topic of payments and the effect that paying late can have on your business and that of your suppliers as well. We've got a fantastic panel, including Philip King, the Small Business Commissioner and former Chief Executive of the Chartered Institute of Credit Management. He's joined by Persse, a director at ePay, with a long career in credit analysis and risk management as well. We also have Geoff Parnell, who is the head of transformation at Octavia Housing, with an extensive background in accounts payable operations, P2P, and also projects. So with that, good morning, everybody, and great to have you here. What's strange times these are, but great to see you in this virtual world that we're all in at the moment, and nice to connect with you on here. Hope you're all doing well.
Good, thanks.
So great. So first of all, to you, Philip, on this topic of paying late and payments generally. We're hearing a lot about it in the news at the moment, certainly in the last couple of months since we've all been in lockdown. As one of the architects of the prompt payment code, do you think that it's something which has gone far enough?
Morning, Alan, and good morning, everybody. I think we need to remember that the prompt payment code was set up and is a voluntary code. So to an extent, it can never go further than asking people to make a commitment to do certain things. Yes, I'm sure it could have done more, but I think we need to recognise what it's achieved. We've got 2,500 signatories. In the last 18 months, we've suspended over 100 businesses for not being compliant, and we've seen more than 70% of those reinstated, having worked through action plans to improve their payment performance. And as recently as last week, we announced the reinstatement of 5 more businesses. And the rest that remain suspended are all working through action plans to improve their payment performance. And that's got to be good. And one of the biggest achievements for me of the prompt payment code over the last 12, 13 years, since I was involved in its inception, is the fact that it has created a debate which otherwise wouldn't have taken place. And I suspect we wouldn't be talking about it this morning if that hadn't happened. It's now moved across to the Small Business Commissioner's office so that the late payment initiatives of government are in one place. That means it is better resourced than it was before, because it was provided by the Chartered Institute of Credit Management as a sort of favour to government, whereas now it's actually properly resourced. We're seeing an increase in signatories, and it's in a good place.
I mean, that must make a big difference as well, having it recognised by the government like that. And I think once that happens, people perhaps start to take some real notice of it as well. And do you think there's anything that you would do at the moment to change things, or to change the code in terms of legislature?
Well, part of the process of bringing it into the SBC's office has been to reform and strengthen it, and that was set out by government in its response to the call for evidence last year. So we're currently working through a revision of the governance process, and that's underway. We will be later this year issuing a consultation to the signatories, inviting them to comment on what changes they think would make benefit. I think we could do some good work around, in one sense, simplifying it, but in another, giving it a little bit more flexibility so that it recognises more than just the binary invoices paid in 60 days. And we need to get it seen more as a badge of honour used by businesses. There's lots of call and clamour for it to become compulsory, but I'm afraid that when that happens, it will cease to be a voluntary code and start to be legislation, and that's a whole different debate. What I want to be in a position is seeing that businesses pay on time as the norm rather than the exception.
Yeah, and I think that that makes sense. So we've got a number of large enterprises at the event today. What would you say Geoff, what would you say that they should be doing, or what should they be focusing on in terms of their smaller suppliers?
Thank you, Ellen, and thanks for having me today. Hello, everyone out there. I think in these times, these COVID-19 pandemic, paying suppliers and the importance of paying suppliers has been heightened. Talking to other former colleagues working in a variety of different sectors and organizations, AP teams have just become really important in this time. Even key workers in some organizations. Um, it's still just crucial to pay suppliers on the 30-day terms, which doesn't always happen in all organizations. But those are some of the key elements that suppliers need to be aware of at this time. Paying suppliers, especially small ones, the cash flow, the viability of the organizations is at risk. I think it's at risk in a normal marketplace, but especially when they're not trading the normal volumes due to the restrictions that are currently in place.
Okay, and anything that you want to add to that, Ant? What would you think that if you're a larger organisation, how should you be responding to smaller suppliers, particularly right now at the moment, to some of them who might be struggling?
So I think there's a couple of points here. Number one is, so Philip often mentions seeing beyond paying the business and seeing the person that sits behind the business. I think that is absolutely true, especially for smaller entities. Now, the difficulty that you're going to see as a large organization is actually segmenting your small, medium, and large size businesses. That's not that straightforward to do. So from my perspective, I think it's about treating everyone with the same courtesy. The fact is that our large suppliers are highly likely to be organizations that might be of strategic importance to us. So it's really important that we pay them on time. But if you don't pay a BT or a British Gas, that's not necessarily going to stop someone's mortgage from being paid. Not paying Dave Jones, the cleaners, on time is going to be pretty scary for him, with him not being able to pay his own bills. So I think that it's really about just treating everyone the same with the same level of courtesy.
Yeah, that's a good idea, and that's something historically in business isn't always the case, as we know. There are some suppliers who really don't get paid anywhere near in time. It is changing, and I don't know what you think, Philip. Do you see that that's something is starting to change since the time that you've been working on it, as it were?
I think we're seeing an element of change, but I think COVID-19 has been quite interesting in the sense that we've seen the best and the worst of behaviours. So we've seen some customers that have written out to their entire supply chains and said they're not going to pay them at all until COVID is over, or they're going to extend payment terms by 90 days. We've seen others write out to their suppliers and start paying them much more quickly in order to make sure they stay in business. And we saw Taylor Wimpey announce that they were paying their suppliers in advance for work that they were yet to do to make sure that their smallest subcontractors would remain in business. For me, there are three things that are really important here. One is that we need businesses to be collaborative rather than confrontational and work with their supply chains. We need to see big businesses move beyond the transactional and think about the emotional impact of what they do. And quite rightly says that for small businesses, this might be putting food on the table or paying for mortgage. So what's a few rows on a spreadsheet for a large business can be much more meaningful for the small business. And we know from research that many small businesses are suffering from huge well-being issues as a result of not being paid. Mental health, sleep disorders, eating disorders, relationship breakdowns, and a whole host more. So this isn't just about finance. This is about much more than that. And it's really important that businesses communicate and talk to each other, and that big businesses recognize their small suppliers as people and have conversations with them so that they recognize the most vulnerable and support them through a really difficult time.
I think that's really key. I mean, we've had some conversations here. We've been running some conversations on Fridays between teams, and that's something which has come up quite a lot as being really, really important to consider for your teams, but also not just for your own organisations, but also for your suppliers and what's going on within their teams as well, to try and help and be a partner to them. But with that in mind, would you say that there is potentially more risk embedded into our supply chains now as a result of COVID-19 that perhaps we haven't seen before? I mean, what would you say to that, Ant?
So from my perspective, there is no question in my mind that there will be an increased risk to the supply chain. The fact is, businesses don't fail because of lack of profit. They fail because they run out of cash. When income dries up and they burn through their own cash reserves, they turn to other means of sourcing cash. And that can be, for example, through debt. And for the current crisis, to illustrate the size of the impact and the demands on cash, there's been over 30 billion of loans issued as part of the government's CBILS and bounce back loan schemes. And this was all targeted at SMEs. Now, that all needs to be paid back. And actually, to highlight the size and scale of it, that is more than the total volume of new loans that were issued to SMEs in the whole of 2019. So it's massive. So the other issue that we've got to bear in mind is, in order to drive cash to these businesses quickly, there was a relaxation of certain criteria, things like affordability checks. So many organizations may not be able to repay them. And then to add to the burden even further, we know that there are numerous larger organizations that, they might argue that this is as a necessity, extending their own terms to suppliers as a means to conserve their own cash. And if they do that without offering them an alternative to obtain cash, then it can create a significant blow to the supply chain.
Yeah, absolutely. I mean, I can see that completely, and it may not be one that that is always visible as well until it's too late. What would you say, Geoff? Is that something which you would anticipate as well? Perhaps as a result of COVID-19, that there is more risk embedded across the supply chain?
Definitely. I mean, the risk is, I think, so much greater due to the COVID-19, and will continue as we see the easing of restrictions and businesses start to open up. It's just, we'll have to see how many businesses are still viable, still there, still available to call on. And then, of course, if you haven't or can't rely on your supply chain, you then have to go find other suppliers. That might mean increased cost, which then has a knock-on effect as well. So there's so many different things that can happen here, but the supply chain is definitely riskier now in this environment.
Yeah, I think that's probably the case. I mean, would you agree, Philip? And if you do, is there anything that organisations can do to limit the risks that there might be?
Well, I think if we think the last 3 months have been tough, then we've not seen anything yet. And I think coming out of this is going to be far worse than living through it. And the next 6, 12, 18 months are going to be really, really tough. We're going to see a complete different perception of risk, in my view. If we looked at the balance sheet for a business, at the beginning of the year, that will have changed fundamentally in terms of deferred payments, loans that Ant was talking about, and a very different model from what we were looking at before. And I think one of the things that isn't being talked about very widely yet is that there's going to be a real shortage of credit availability. If I'm a plumber and I'm looking for a builder's merchant to supply me, that builder's merchant is going to be looking at its risk portfolio and taking a different view about how it supplies, how much credit it gives, in order to mitigate against likely losses from businesses failing as a result of COVID. And I think we're going to see lots of businesses, and Geoff was talking about finding new suppliers and so on, but one of the risks is going to be that suppliers are going to be reluctant to grant credit to some businesses, and less willing than they were before. And that's going to be another issue to throw into the mix. So I think we're going to be in a very different landscape, and we have yet to see exactly what it's going to look like.
I guess there's a certain degree of nervousness in there, isn't there, as well? I mean, it's not where there's uncertainty, it can create that kind of nervousness, and then almost a stagnation of business across the supply chain, I guess. I mean, what about the duty to report legislation? Because if you're if you're an enterprise size organisation, then you've got that to contend with. Do you think that has had the effect on business that it was intended to have? I guess I'll go to you first with that, Philip.
Well, I mean, for me, duty to report has been a game changer because for the first time, we've been able to measure compliance against the prompt payment code using data submitted by the signatories themselves, which is why we've suspended over 100 businesses and reinstated 70% of those in the last 18 months. But I think, transparency is always important, and having that information there is key. The one gap for me is that not enough small businesses are aware of it, know where to look, and use it. And actually, if I was a small supplier to a large business, I would want to look at the portal and see how they pay their suppliers and use that when I'm negotiating with them. And we need to get greater awareness of the data that's freely available and can be really useful.
Yeah, no, I think that makes sense. I think that a lot of it is an education piece as well, isn't it, as you're saying. What do you think, Geoff? Is it something that you've come across with your own organisation or across businesses that you've been in before? Is it something that you've had to contend with either from a supplier side or otherwise?
Yeah, I've had to fill out the reporting. So I think it's where it's really helpful from an organization standpoint. And as Philip said, is just understanding what other organizations are, how they're performing on their payment. The payment performance is good from a benchmarking standpoint because you allow to measure yourself as an organization up against different organizations that are similar size or from similar or different sectors, which is helpful. It does make me wonder about the accuracy of some of the reporting. So I think there's some things that come out when you start to do the benchmarking. But as Philip says, in his role, they're actually starting to hold them accountable to those the reporting that they're doing. So there does seem to be some checks and balances there. Should it be more? Should there be more reporting? I mean, I'm personally a big fan of reporting accounts payable and P2P stats across an organization. And if you can have the data to do that, you can really push and drive change and transformation and become much more efficient and effective. And by doing that, the end result is you pay your suppliers quicker. And that's one of the real benefits that you see. Plus, you reduce costs and just can do it in a more lean manner.
So, and Geoff, while we're with you, what sort of initiatives have you put forward to your suppliers, particularly now? Have you done anything differently than you would otherwise have done? What sort of initiatives are you working on?
I mean, there's a variety of initiatives I've done in my time of trying to improve different P2P teams. I mean, it starts with when it comes with paying to pay people on 30 days. And signing up for the prompt payment code is a great thing to do if you're a large organization or a medium-sized organization. That's really helpful. There's also other organizations I've worked with that taken a step and they've gone and paid SMEs in 10 days. So that's another way of being corporate, the CSR element and just being responsible with your suppliers and also looking after the small and medium enterprises. A few other initiatives that I've done in the past is an initiative called No Paper Invoices, which is just trying to move away from receiving any kind of paper invoices, becoming more electronic, which feeds into implementing e-invoicing, which I'm currently in the middle of doing this weekend or this week. So those are some of the different benefits. Another one is no no pay, which is a great thing to do, an initiative if you're a more mature organization. But you have to realize what's the right timing to do that, and it also feeds very quickly back to the reporting. If you want to
Yeah.
drive this change, you have to understand how you're performing as an organization, how your different departments are performing, and actually even how your AP team is performing.
And I guess some of that goes down to making sure you've got the right processes in place in the first place, and also obviously some degree of automation as well, which is difficult to measure something without having that in place. So, Ant, what do you think the initiatives like dynamic discounting or supply chain finance have at this time? You know, what sort of place do they have for in this environment for suppliers and organisations?
So I think they should be embraced. As I mentioned earlier, businesses don't fail because of lack of profit. They fail because they run out of cash. And supply chain finance solutions is all about delivering access to cash. A financier could fund an early payment on your behalf, therefore supporting your supplier with no impact to your own cash flow, if that's what you want to do. And the honest truth is that for those organizations that feel that they need to extend terms to preserve their own cash, putting a supply chain finance solution in place can actually soften the blow to suppliers. For those organizations who want to then drive an income, but also support their suppliers, they can then deploy, as you mentioned, Ellen, a dynamic discounting solution that can proactively offer suppliers an opportunity to get paid in exchange for a discount. That could result in a relatively decent return on cash, but also it can be cheaper and simpler for your suppliers in terms of accessing cash. So that is a win-win. And then the better solutions, which I really think are where things are starting to change in this segment, are ones where you can actually segment your supplier base. So imagine that being able to identify the most vulnerable suppliers and saying to them, you can receive a payment in exchange for no discount, or a lower discount to be able to support your supply chains. I think that's really, really important. The unfortunate truth is, however, most supply chain finance solutions don't effectively work on the long, thin tail. But if anyone wants to talk to me about how you can support the entire supply chain, feel free to reach out after this.
Okay, thank you, Ant. Obviously, at the moment, I think it was mentioned earlier or just now that organisations are increasingly looking at their corporate social responsibility obligations, particularly now. So, how important do you think that it is for a company's future reputation that they're actually looking to their payments? And I come to you with that one, Philip.
Well, CSR is important across the board, but for me, paying suppliers promptly is no less important than burning less coal or putting down more trees or anything else. If you don't support the supply chain, then you are doing a disservice to the economy and to your suppliers and to the wider community. We're seeing the best and worst of behaviours highlighted through the COVID crisis, and reputations will linger on. And I expound the virtues of what Taylor Wimpey have done. I was on a webinar with Pete Redfern, their chief exec, a couple of weeks ago, and they've done some fantastic stuff for their smaller suppliers. And we've seen some retailers doing some great stuff and some not. And I think that these reputations will linger after the crisis is over. And businesses are certainly more and more worried about their reputation, and it's becoming a bigger issue. And long may that continue, because I think it's really important.
Yeah, I absolutely agree, and I think that you're right. I mean, when organisations are struggling, they're going to be looking to the ones who help them through these difficult times, and still obviously want to be there on the other side of it. So I think it is going to be important. Would you agree with that, Geoff?
Yeah, definitely. I think when it comes to things like paying suppliers in 90 days. I think the sector, kind of overall, the marketplace had already moved towards that. That wasn't a really good thing to do. You weren't doing the right thing in that instance. Now with COVID-19, I think it even emphasizes it even more that if you're not paying people in 30 days, or if you're doing 90 days, it really is unacceptable, very much, or irresponsible in a way. So I think these are the things that where the CSR really comes in, and the reputation risk that people are taking on by paying it 90 days right now, for all the things that Ann and Philip have mentioned already, with the effects on individuals and their lives. It's key. So I think that you have to do that as an organization and take that and make that a priority.
Yeah, absolutely brilliant. I think that you were right there, Philip, earlier as well, that some organisations are really able to do that, and are actually, and particularly those who are helping along in the NHS supply chain as well, and being really innovative in the ways that they can, one, pay their NHS supply chain, and also in terms of the manufacturing as well, what they can actually do to help them in terms, particularly in terms of the PPE. We've seen some, obviously there's been some issues there, but some really interesting and good innovation happening there too. So what sort of part do you think technology plays in all of this? You know, a lot of people will say, well, is it culture first? Is it technology first? Or is it process first? What would you say, Philip?
I have really strong views about this. If the culture isn't right, if there's no intention to pay people on time, then the process and technology are pointless. If the process isn't there and you introduce automation, the risk is that all you do is accelerate poor processes and make things worse. But technology is an enabler. So for me, it's absolutely culture first, process second, technology third.
Sounds good to me. What about you, Ant? What do you think?
I completely agree. Culture first, process second, technology third. I mean, what I would say, if we want to be effective in this, we have to get to that third element fairly quickly. You know, because it's technology that will enable you to effectively reduce manual errors, create automated communication, and actually help with managing risk. I mean, I'll throw out a stat that I can recall fairly clearly from last year. Tide said that did some analysis, and there was something like 900,000 hours a day spent by SMEs chasing payments. That means that organizations are being chased by a similar amount of time. That just feels crazily inefficient and unproductive. Imagine if you were to put technology in to help digitize. I mean, I think we should embrace digital, but Philip is absolutely right. Culture first, process second, and then quickly adopting new technology.
And any words on that from you, Geoff?
I agree with both of what they've said. So that's the right order. I think just a couple other points is the appetite for change is something that has to be there to get it right. The processes, you when you get into that, looking at the processes, always trying to look for the quick wins initially. There's changes that can be made that sometimes seem quite subtle, that can actually make a big difference. And then technology, the last thing on that is just the investment. You have to weigh up the investment and the return on investment.
Okay. Well, it looks like our 30 minutes is pretty much up. It's done very quickly. It's been fantastic speaking to you guys. Have you got any final words? I guess we should think about in terms of regulation or compliance or anything along those lines. Philip, do you want to, if there's anything you want to share on any new stuff that you might know that's up and coming that we might not know about before we go to the break?
No, not really. There's lots going on, Ellen, but everything's on hold at the moment because of COVID-19, really. I'd like to say two things. One is that if we want the supply chain to be there after COVID-19, we have to look after it, and that means paying it promptly and making sure that it's supported. And the second is a quick plug that the SBC's office is a free service available to any small business struggling to get paid. Talk to us. We've collected £500,000 for small businesses since COVID starting, and I've got a team of caseworkers who are very happy to do that. Find us online, Small Business Commissioner.
Excellent. Well, I would encourage you all to do that. It's a great resource. thanks to all of you for joining in today. And all of these guys will be on the chat facility. So if you've got any further questions, then do feel free to ask them, and they'll I'm sure be happy to answer any questions that you do have. So with that, we're going to be going into a coffee break just now, and do take the opportunity to chat to our event partners and ask them any questions that you might have, and download any of the research information as well that they put on there. Some really great research pieces. And just after the coffee break, we will be hearing from Paul Bryan-Hill, who is the VP of Finance Operations, NBC Universal, and he'll be talking about how to achieve transformation success. So enjoy your coffee, grab a coffee, and interact with our sponsors, and we'll see you soon.